The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exemplary edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host who likes to come to you at this time.
The following takes place between 2 p.m. and 3 p.m.
And I know I've forgotten something, but I don't know what it is. You know when you forgot something at the store, but you can't remember? I'm sure I'll figure it out here during the show, but I think I forgot something out. Well, shorts got a short. I guess that's it. Huge put-call ratio yesterday. But that's not the end-all, be-all. We're starting to see some little cracks. Heard Steve start talking about some of the stocks earlier that could be, but haven't. Don't jump the gun. But I have a fairly decent signal that I developed by one of the guests long before I was what I would call a good trader. I was kind of good to start off with, and then had a lot of years, started getting good again in 2003 and 4. Problem with starting in big markets is that you think the markets are always going to be that easy. Another thing I heard Tom once say was, until you've gone through several of these cycles, you won't even really be able to understand the stock market. I remember there was a company in town growing up, and it put in car stereos. And if you went to them, they knew what would fit. You could go in, talk to the people, they take you in, you can have this radio, and these speakers will fit. And back then, it wasn't like, they had everything that would fit all the different cars. You really had to know your stuff to figure it out. And I talked to the owner of the place, and he called it acquired knowledge. That was that instead of hiring people to sell stereos and put them right on the floor, he stuck them back in the install bay for a year. They had to learn what went in all the different cars and how stuff worked and what the installers could do. And then if they were presentable and you could wash them and clean them up, they tended to be a grubby bunch after a year. If you could clean them up, put a nice shirt on them, put them on the sales floor, they instantly knew what was there, and you didn't have to constantly go back and forth to figure out what worked and what didn't work. And there was this before Best Buy came along, some of the other ones. They literally owned, I think, 80% of the car stereo install business in the city, and were the biggest single advertisers for a single company that didn't have any locations outside, like other cities and stuff. I think it had 2 locations, maybe 3 at one time, just in the same city. That acquired knowledge is what he told me you can't teach anybody. You got to go through the pain of learning, and you only do it by repetition, and it takes a while. No matter how many books you throw at somebody. Now, of course, computer tells you what fits, what doesn't. You can scan things in. Yeah, man, I don't think they even had, I don't think we had a car CD player at the time. I think CDs were just coming out, probably early 80s. So there is acquired knowledge. Doesn't matter how many people tell you how many books to read or go to this seminar. There's some things that you only learn by doing. Can't imagine that no matter how many years somebody played in a simulator for landing a 747, that you probably didn't want to be in the 747 when they were landing it the first time. You probably want them to fly different planes and get and move up to bigger and faster and larger planes and start with one engine, maybe two, and then go to four. Do you want to just jump in the deep end? Well, a lot of people talking about that in the den lately, all pointing the finger at the Robin Hood gang. I don't know if there's any truth to that. A lot of times you get blame, but maybe there is no causation without. Oh well, there's no correlation without causation. But don't know if that's real or not. I don't know how you'd know it was real. But and I don't know if it'd make you any money if you knew it was real. But maybe you could, if you were actually behind Robinhood, you could just do the opposite of what most of the morons were doing. You could find the people throwing away the money as fast as you could and get on the opposite side of whatever they were doing. I always thought that would be an interesting trading scenario. But it would be. Anyway, interesting day out here. I have to say that I am somewhat, was flummoxed. I'm okay now. Went down on the beach, walked around a little while, got my head straight. In these turbulent times, it's easy to go off the rails. And probably because I hate it in other people, I probably hate it in myself even worse. I think I said something to that effect in the newsletter this morning, and that is, man, you want to talk about the most anti-smokers in the world? It's people who smoked and hate it in themselves today. You know the types. They're not just don't smoke. I mean, they're ready to call to arms, get the National Guard out, make sure that there's not a chance in the world that you smoked within a county of them. And maybe I got a little taste of that, but I'm kind of calmed down. One of the reasons I think I was that way, well, I won't get into it, but there are some other things going on, and it's very tough to divorce yourself from all the news and put on your trader's hat. And I always like to go back to that quote from, what was it? I think it's Joe DiNapoli, about if your head's right, not right, then you can't trade. And unfortunately, not a lot of us have people standing behind us, tapping us on the shoulder going, hey, your head's not right. Go over there, figure it out, then come back. But you can't trade until you have gotten used to everything. He also said something that if you haven't traded for 10 days, that you can only trade in quarter parts of your positions until you start actually showing profits on a day, not on a daily basis, but continuing profits. So if you're gone for 10 days, when you come back, start off small. I thought both of those actually were good advice that I violated. So again, one of the people that you hate in yourself, what you see in other folks that you despise in yourself. I don't know if I'd say despise. See as a weakness, maybe. Anyway, we're hanging up here at the highs. When we come back, we're going to do a little history. Then we're going to talk about the first big signal, the crack in the mirror, the fly in the ointment. I'll come up with some other mixed metaphors during the break.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
That it's all just a little bit of history repeating.
On this day in 1956, Santa Cruz, California, captures the national attention for its response to the crisis. The city authorities announce a total ban on rock and roll at public gatherings, calling the music detrimental to both the health and morals of our youth and community. Of course, also after this headline, you had New Jersey, San Antonio, and other cities hop on the bandwagon to get to the thing that would be the downfall of Western civilization. But didn't seem to last that long, or I guess be that effective. But we're banning it, therefore, of course, making it only that more tastier to a young public. You can't do that. What do you want to do? You want to do it. What else is going on here? Oh, I wanted to get to the charts. Rock and roll was just a fad, yes. I'm sorry about that. I wanted to get to some other things going on in the market. GDXJ. As I said, seeing the first kind of signs that you would get a possible pullback in the market. One of the ones I bring up fairly often is the double repo pattern, and that is when you're up and away for 15, 20 days in a row. You really don't get much in the way of penetration of something like a 9-day or a 3-day, a 9-day moving average or a 3x3 displaced moving average. Those are pretty good ballistic curves There's nothing any magical about it other than the fact that it's probably a good approximation of the momentum in stocks, which is in the shorter term frame, a week, 2 weeks, the bigger issue that you're dealing with in the markets. But Jim Sinclair brought this up. I think it had to be back in 2002. And he said that what you want to watch out for is when gold's in a equity market going higher. What you want to watch first is the sign that people start to sell gold. His theory was, and he said, he wrote risk control algorithms to buy and sell gold for many people on the street. And he said the first thing when they think that the market is going to head lower is that you will see gold start to show real weakness in the market. He says that happens about 2 weeks into a downtrend. Gold tends to and the miners tend to stabilize after a couple of weeks. And that's generally, if the markets kind of go out and go flat, that's generally where you get the big movement in the markets for gold miners and gold itself. It tends to be, though, that they shake you out right before it's time to really be long in gold. Now, I missed this one yesterday, and I'm probably one of the other things that's vexing me, and you all know how I dislike being vexed, but was a double repo pattern in the GDXJ. And generally, you get a big, this is a good example of what happens in it. You get that 10, 15, maybe 20 days above kind of that trend line. You get a couple days underneath it, a couple days above it. In this case, you had 1 day above it, and then the instant reversal yesterday. Volume picked up. You get the gap down below. There's not many better signals out here. They're going to tell you that gold is going to be weak, or at least the gold miners going to be weak for a little while. This would set up that you could get a retracement in the GDXJ all the way back to 38 bucks, and it wouldn't be bearish specifically. It would be the washout that comes before a bigger move higher. So there's a gap. Goes back to April 22nd when this gapped up with 17 million shares. That's where the volume is probably going to be. You had another day out here with a big candle on the 13th of April with 24 million shares. It's right in that $38, $39 range, which makes me suspect that's where it's coming for. Now, this isn't the worst of the offenders out here, but it is the first that I've seen really that is showing it. Now, the reason I think that's important is, one, after Jim Sinclair talked about this, I did go back and research it. It seemed to hold water. It doesn't happen 1,000 times in the last 20 years, but it's happened enough to make me think that that's something I should pay attention to. Is it massively statistically significant? The answer is probably no. Is it enough to make me put my spidey sense on probably, 5 or 6, take it off of 3, start looking a little harder at everything else? I think the answer is yes. Again, not a lot of signals. If we're going to get some, generally the GDXJ failure, which you could say either started yesterday or confirmed today, means that maybe we've got a day or two out here where things might start to fade, and then we'll see them snap like we saw with the GDXJ gapping down today. Now, volume not that amazing, down on a 6.1 million shares today. Compared to, I'll call it 11.7 back on the 27th. So is it horribly bearish? No. Could you still go back and get that 38? That would be the ideal if you wanted to get back on the gold train. And if you got that kind of pullback, I'd probably be looking for it back there if it did it all with light volume. And again, a lot of people think different things. His theory was that people that owned equities on Wall Street would buy gold on the way up. When they think the market was headed down, since they were selling their stocks, they didn't need as much gold as a hedge in the market, and it would head lower. So that's kind of it. It's one of those things where you got to think that it is possible that we're seeing the first few waves. Some of the other things out there are, I'm going to say, lackluster, pushes higher, AAPL, right? If I can type correctly. Lackluster pushes higher. You're within $1 of the high in Apple. 28.4 million shares last time, got about 15.4 million shares today. So this may still be the strongest stock, or one of the strongest stocks in tech. But it's had a nice run. The question is, when they put the they run the flag up the pole, will everybody salute when it hits that 326.34? Now, like I said, everybody thinks it's just going to be like a light switch. I don't think so. I suspect this is going to be one of the toughest ones. Just like I was going to buy dust on the turn on the GDXJ. The signal came just slow and painful. And then within, I don't know, a minute or two yesterday, it took off, and I'm not a chaser, so I didn't chase it. Not a chaser. Not prudent to chase. At least I don't. We'll be back in a minute.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
From the Den, we have a question about Sabre. This is, if I'm not mistaken, the SABR. It's been around for forever. I can remember back in the 80s. It was the system for doing reservations for airlines. Same one, right? I assume it was. Just make sure it hasn't changed in all these years. In my accelerated decrepitude. Yeah, this is the same one. Thing's been around forever. I remember seeing things on the documents, actually getting documents for all the travel I was doing, and it had Sabre written all over it on that time. Up today on kind of a light volume. The only thing I'm saying is that the whole market's probably getting a little long in the tooth and maybe a little tired. A lot of times you don't get some areas. I sold my long positions, a day or two ago, and it wasn't that I thought that they were going lower. I just didn't think, one, that they were going to go much higher. But let's say there was a 10% or 20% chance that it hopped back down below like the GDXJ did and just took a nice little leap. I don't see a lot of reasons to be long it. You've had a nice ride. I don't know where you bought it, but I'm a big fan right now of either being in cash or waiting for a signal to short. I'll try to find it, but there's a good description from Fooled by Randomness in Nassim Taleb, where he talks about a woman in Western society and how long how long you think she'll live. And at one point, she gets to 100 years old, and statistically, you can make a big bet that she's not over 102. And if she gets to 105, you can make a bet that she's not over like 105 and a half. I mean, you get the diminishing returns on the far end of the right shoulder. They tend to be bigger, but they also tend to give it up just as quickly. And I'm more interested in making sure that I've got some nice doubles and triples now instead of waiting for the home run. You may get it, you may not. The stocks that I got out of, I think I'm probably still better off than waiting for today to sell. So I think I did the right thing. Well, let's check. I haven't looked at them in the last hour. Yes, on both of them. The stocks I had, I'm better off buying a nice margin than waiting to today to sell. So that's one of the reasons why I kind of end the show every day with that. Sell when you can, not when you have to. I'm not vexed as many people are with leaving money on the table. I'm generally much more interested in starting off the trade and buying the dips effectively, which I've been doing for a long time. But if there's anything I do well, it is buying massive washouts. And, when these things came back, I was buying on the right day for them, which made them, decent trades. Am I going to retire on them? The answer is no. Were there a few that I could have bought? Yes. But, man, if I would have been wrong on them, they would have set me back maybe a couple of months in profits. So I would rather have one that I had a lot more visibility and faith in and able to sleep with than the ones where I would be constantly panicked that these things were going to turn on me like a honey badger. I'm doing, if you're not watching, I was doing my Jonathan Winters imitation. Poorly, but a Jonathan Winters. If you have to tell people who you are when you're doing an imitation, it's not a good one. So you can take that. Anyway, as we said, we're looking at Apple. Man, it's close. Do you always get that last tick? No. Would I be shorting Apple? There are 100 stocks. There are 1,000 stocks that look better to short than Apple. But you know what? The market's just kind of tired. Do I see massive downside? No. Could you get back to 3,000 as a test? I don't think that would be problematic, and it still wouldn't really negate a bull case all the way maybe to the end of the year. So don't see that. Volume, well, I wish it wasn't as lumpy as it was, but it is kind of lumpy. You can draw conclusions on either side about what's happening here. I don't think you can say that in summer volume right now that it's as bad as I thought it might be. The volume's actually better. And, of course, it's to the upside. So you can't be horribly pessimistic unless you're just that way all the time, which I know a few people are. But not all that big deal. Anyway, got other questions out here. Do I see the same thing in the TLT? Well, it on a kind of a bigger time frame, with the Fed so invested, I don't know if really the patterns right now in the TLT are going to make a lot of sense. It makes a lot of sense to think that the patterns will overwhelm what the Fed is doing, but I don't think so. I think at this point now, if you're trading from the patterns on the TLT, it is problematic to really see it. But we did gap down today. Not a lot of volume, though, either. So I can't say that there's a lot in that. Question somebody had about Sabre, about how bad is the short position. I think you're already through it. I mean, it's kind of big right around 758. So my guess is if the shorts haven't really covered, maybe you get a few more to cover at $9. But at the moment, I think most of them would probably, your last really big day on Sabre being short was on the 22nd of May. So it gives you a little indication about when people and where people were shorting. And the close on that day was 725. Okay, let's see if we have more people coming in. Okay. Radio question. I'm pretty sure would love the show. Tuning in now. Okay. Okay, that was something I answered earlier. And we've got another question. Do I have time? I do not have time. There just isn't enough time. And, of course, youth is wasted on the young, isn't it? But when we come back, I'll try to answer this question, and that is, where would I start if I wanted to learn about machine learning? And is there any packages you can buy that mere mortals, I'll put that word in for them, mere mortals, they were going to say something about their intelligent quotient. And I don't think that's true. Ignorance is not the same as being stupid. So I'm going to say that they have a little time. When we come back, we'll talk about where you might want to start to learn without a lot of math and rigmarole, where you can kind of figure out if there's something more for it and whatever you want to do with it. Anyway, we'll show that in the next segment. Give me a call, 877-927-6648. Email me at path@tfnn.com. And, of course, I will be waiting. I will hold my breath. Ask for Blue Bull.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
And we're back. Quick question, probably a long answer, on what you should do to start learning machine learning. You can get a free version of a thing called Rapid Miner Studio. It's one word, Rapid Miner. And it's a for sale package. I think they charge like 10 grand for the thing. But if you use less than 10,000 examples, or think of it as rows in a spreadsheet, then it's free. In fact, depending on what you do, you can get that up to, I think, 50,000 for free. So it'll do some fairly decent-sized models, and of course, they can take quite a long time. The reason I kind of point this out is that there's lots of different versions and things you can do before you ever get into programming. And maybe you're not a programmer at all, but you can think through your problem logically. The one real thing I like about this is that from the way that you've got all the different tools to just taking the data, you just kind of take it here and drop it on the screen, and that's it. Now, they've got a lot of examples to go through and tutorials so that you can know how to use some of the different versions of that. But they start off, almost everybody starts off with this Titanic example, and you can predict who's going to live and die depending on what they paid for their ticket, where they left from. You know, there are a bunch of factors, whether you're male or female, and you can pretty much make a fairly decent guess if you get the data of the passenger, whether they lived or not. And it's one of the kind of, what do they call it, canonical examples of how things work. But they've got a whole bunch of these things, like we talked, I think maybe a week ago, about churn prediction. And that is whether or not customers are going to stay with you. Of course, a big thing for Netflix and others who will, you'll get Netflix for a month, watch everything they have, and then not come back for 6 months, and then have a a update. And of course, Netflix had really spent a lot of money. In fact, a lot of the stuff that is in machine learning, of course, came from the needs of these big companies. Churn prediction, really kind of a offshoot from Netflix. And other things like predicting what you're going to buy, that kind of stuff came from Amazon. Predicting what you're going to search on, of course, was all about Google. But almost, from trying to identify, if it's a dog or a person in a photo, that really was part of Google's push for some of the stuff they wanted to do. And there hasn't, other than those big things, there hasn't been a lot of new applications for machine learning, because it was very tough to figure out what it was doing if you didn't write everything yourself. And you didn't have all the programmers in the room, you're probably not going to be very successful. Or if you had 4 years as a PhD in some college, as a PhD in machine learning and algorithms, maybe you could get something done. But that's why the guys with the most education on it get out of college at about $450,000 a year. But of course, they probably went 6 or 8 years to do that. Anyway, for the things that pretty much they've all figured out, you can do it. It's not going to predict the stock market for RapidMiner, but you can get a very good idea what you can do with it. And a lot of those things do have applications. I do use it for kind of brainstorming possibilities in the market. A lot of what you do in the very deep part of machine learning is getting the data and or creating features. A feature would be something like a MACD crossover or a 50, 200-day moving average crossover. Now, I'll tell you that those probably not going to help you a lot. But what I'm going to say is it's not the data so much as what you make from the data. And a lot of that can be actually done in RapidMiner for free. So there you are. If you got a kid that's learning, start them out here before they get into everything else, so they kind of have an idea what it will do. The tutorials are easy. Like I said, you just kind of drag and drop stuff here, and then click on a button, and it'll actually run. And you get a result, and you can kind of figure out by changing some of the parameters what happens. So it's like trying to at least going and getting in a plane and maybe taking it around the patch a few times before you decide that you want to pay the money to actually get a license. Maybe you want a little taste of it, or maybe you actually want to use it in your business. I like these guys. They do tend to try to go after the big corporate customers. So they want 10 or 20 grand for the big model. But for the small stuff, it works fairly good. And since they know me down here, I actually make some shekels from every once in a while for people being sent my way to do some of the smaller heavy lifting in helping them with models on RapidMiner. Okay, what else do we have here? The TLT we were looking at, we're up 42 points on the S&P cash. Let's go and check in on the volume right now. Okay. And, volume's pretty good, about 8.8 billion shares. So kind of really tough to say that things are horrible. Let's take a look at Microsoft. People ask me why, during the break via email, why do I think maybe this is kind of the top or close to the top? Probably a little bit of sell on the news. Everybody asks, why we were being, and the market was going up. And of course, the ADP numbers came out, were massively better than everybody predicted. And Jane asked via the email, when I was talking to her over the last couple of weeks, I figured that they were massively wrong. And I said two things. She says, Dave, I see that you were pretty much right in our discussions over a couple of weeks ago. Do you have a crystal ball? No, but I do have a crystal brain. And my crystal brain says that experts are almost always wrong. So I figured from the COVID thing to unemployment, I'm just pretty much jaded in the belief that they're going to be wrong, because most of the time they're wrong. And most of the time, everybody's wrong. So, a lot to be said for just doing the opposite thing. Anyway, Microsoft, not much happening. Again, could you make a case for some distribution out here on Microsoft? A pullback to 170 on any kind of failure here would not be beyond the scope of reason. And yes, the shorts were grist for the mill going higher. They're still doing it, but at some point, it doesn't matter. And we're maybe to that point. They can short. I don't know if there are any shares left to short. Maybe that's it. Maybe that the market quits going up because literally they can't short it any longer. Maybe that's an answer. We'll be back in a minute.
Back in the day, I joined the Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step-by-step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Frontline FRO. I don't know exactly what they want to do. You probably want to look for a retest of $7, $7.15. I don't see a lot in this. You gap down today. You didn't have a lot of volume. A lot of people shorted the living daylights out of this yesterday. And at some point, their shorts are going to be right. They can't be wrong forever. They've been wrong for 4 or 6 weeks. But like I said, sell the news, maybe a little bit of a reason. out here when we finally see the job numbers not being the end of the world that everybody else was predicting and was wrong about. There's always a kind of a belief to overstate your case. Question in the den, is it true that server farms powers EM service are China-based? I don't believe that is true. What happened was Zoom would send data back to China, to the Chinese Communist offices. They say they no longer do that. I don't know if that's true or not, but there's an uneasy kind of relationship between them and their communist overlords. I've never thought that much about it, about their company. I always thought that video over IP is something that any company with 500 million could do. I was always puzzled that idiot from Microsoft that was there forever, Ballmer, paid $8 billion for Skype. He could have built it himself for $500 million. So I don't know why everybody is so big on it. I don't see anything in there that anybody else couldn't easily do. There is no moat. I like moats around my businesses. Anyway, don't think that there's that much to it. I think it's just, I think somebody said in the end, right place, right time. Sell when you can, not when you have to. We will see you here tomorrow. Same bat channel, same bat time.